In this video, I'll help you get started on the Chapter 7 Payroll Accounting homework where you are tasked with recording the payroll journal entries for Prevosti Farms and Sugarhouse. This is the listing of the 14 journal entries that you need to record for this company. There are 4 payroll registers, each one for a biweekly payroll period, that you need to record the journal entry for. In addition, you need to record the employer's portion of the payroll taxes, which includes the calculation of unemployment taxes, and the payment of the employee's pay on the payday. In addition, there are 2 additional journal entries for the payment of the payroll liability. After recording the journal entries, you also need to post the journal entries to the general ledger. I'll help you with recording the first journal entries so that you have a good starting point. The first journal entry description is to journalize the employee pay. That means we need to record the summary of what is on the payroll register. Basically, the gross to net calculation, starting with the gross pay $7,318.66 and then the Section 125 deduction $1,020, the 401k deduction of $284.91. Federal tax withholdings of $44, Social Security tax of $390.51, Medicare tax of $91.34, state tax of $201.45, and net pay of $5,286.45. The gross pay is recorded as a debit, whereas all the deductions and withholdings and net pay are recorded as credits. And the beauty of it is that if you enter everything correctly, the total debits will equal the total credits. So, let's record the first entry. Here is the first journal entry. The gross pay is recorded to account salaries and wages expense as a debit of $7,318.66. Next is the Section 125 deduction, which is recorded in the account health insurance payable Sec 125 with a credit of $1,020. The 401k deduction, which is recorded to account 401k contributions payable with a credit of $284.91. Federal withholdings tax, which we record to account employee federal income tax payable with a credit of $44. Social Security tax, which we record to account Social Security tax payable with a credit of $390.51. Medicare tax, of which we record to account Medicare tax payable with a credit $91.34. State tax, which we record to account employee state tax payable with a credit of $201.45, and finally net pay, which we record to account salaries and wages payable with a credit of $5,286.45. At this point, we double-check that the total debits equal the total credits by adding up all the debit and credit amounts and see that both sides total $7,318.66. You can record all journal entries first and then post them to the general ledger. Or, you can record and post the entry immediately. In large companies, accountants record the journal entry first, then upload or import the entry to the accounting system, and then a journal entry approver will review and post the entries. In small companies, the person who records the journal entry often is also the person posting the entry. So, in that case, you'd probably want to complete the posting before starting the next journal entry. And that's what I am going to do here, record the journal entry and then post it right away so that you can see the entire process. We start by entering the date and the amount of $7,318.66 into the account salaries and wages expense account and then enter the credit of $1,020 to the health insurance payable account. Next is the credit of $284.91 to the 401k contributions payable account and the credit of $44 to the federal income tax payable account. We post a credit of $390.51 to the Social Security tax payable account, $91.34 as a credit to the Medicare tax payable account, the $201.45 credit to the employee state income tax payable account, and a credit of $5,286.45 to the salaries and wages payable account. The next journal entry requires you to record the employer payroll tax for the February 10th pay period. It tells us to use 5.4% for the SUTA tax and 0.6% for the FUTA tax. And, this is very important, no employees exceed the FUTA or SUTA wage base. We begin with the employer Social Security tax, which is the same as the Social Security tax withheld from the employee's paychecks of $390.51. Next is the Medicare tax, which is $91.34. We then calculate the FUTA tax by multiplying the gross wages of $7,318.66 by 0.6% for $43.91. Then, we calculate the SUTA tax by multiplying the gross wages of $7,318.66 by 5.4% for $395.21, for the total employer payroll tax of $920.97. Next, we record the journal entry in the General Journal by debiting the payroll tax expense account for the total employer payroll taxes of $920.97 and then crediting each of the liability accounts. Social Security tax payable of $390.51, Medicare tax payable of $91.34, FUTA tax payable of $43.91, and SUTA tax payable account of $395.21. We add up the debits and credits and compare the total debits and credits to ensure that they balance. Our total debits are $920.97 and our total credits are also $920.97, which tells us that our journal entry balances. And we are now ready to post the second payroll journal entry for the employer's share of the payroll taxes. Some accounts have not activity in it yet, whereas others have activity from the first posted journal entry. We start with the account payroll taxes expense and debit the account for $920.97, the amount of the total payroll tax expense. We credit $390.51 to the Social Security tax payable account. We credit $91.34 to the Medicare tax payable account. We credit $43.91 to the FUTA tax payable account. And finally, credit $395.21 to the SUTA tax payable account. That brings us to the third journal entry that has us issuing the employee pay. We first look at the account salaries and wages payable, where we recorded the liability for the employee's net pay of $5,286.45. Now that it's payday and the company is issuing the employee's paychecks, we need to reduce the account salaries and wages payable because this liability of $5,286.45 no longer exists. It has been paid. To reduce the salaries and payable account, we debit the account because this liability account increases with credits and decreases with debits. The second part of this transaction has us reducing the cash balance with a credit. So, debit salaries and wages payable and credit cash for $5,286.45. After recording the journal entry in the General Journal, we can now go ahead and post the transaction to the General Ledger by first debiting the account salaries and wages payable for $5,286.45 and calculating the new balance of $0. Next, we pull up the cash account and enter the amount of $5,286.45 into the credit column and calculate the new balance of $41,713.55. I hope this video gave you a good start with your Chapter 7 homework and the various journal entries that need to be recorded. On this homework assignment, I am giving you 6 check my work opportunities. Don't hesitate to reach out to me if you have any questions.